Who is Priya Saiprasad, co-founder and general partner at Turing Capital?
So I was born in Chennai, and when I was very young, we ended up moving to Nigeria, and then we moved to 12 different countries before I turned 12 until we finally settled in the Bay Area.
So how did it shape your thinking?
You know, every time you sort of move from one place to another, especially as a child, you sort of have to reinvent yourself.
What was the toughest moment of your career when you left corporate venture capital?
It is exactly the transition to start Turing Capital. So now looking back on it, it feels like it was so worth it.
What are some of the undervalued pockets where people are not looking at, but you see it's going to blow up?
In the next 3 to 5 years,
if you look at companies who are building foundation models, they spend a lot of money training. They are burning a lot of cash. And if you look at the wrapper or the application layer companies, they are also very low margin business. So where is the money?
Where is the dollar? So I guess let's talk about
What's the worst thing you've seen a VC do? Either in a board meeting or outside.
As a VC, it is important.
Hello and welcome to another fantastic episode of Ctrl Alt podcast. We bring the trailblazers, the who's who of Siliconvalley on the show. Today, I'm so proud to have a woman in STEM who has shattered many records. She was one of the youngest hire at the Mayfield fund. But before that, if you look at her life, she's someone who saw the AI wave coming many years before it did. One of the founding members of the M12 Microsoft Venture Fund. She was also absorbed by SoftBank. And all this happened before she was 30. How does one get to be like this? Just coming out of a bachelor's degree at UC Berkeley, she manages to walk through this experience and start a fund, the Turing Capital, with 2 of her colleagues. And within 2 years, they have made 12 investments, 1 unicorn and 1 exit, and 5 follow-on rounds. I'm talking about a miracle here. So let's just introduce the miracle here. Priya, welcome to Ctrl Alt podcast.
Thank you so much for having me, and honestly, super excited to be here and for this opportunity.
Wonderful. Priya, you've been in 12 countries in the first 12 years of your life. How does one do that? And tell me your story. Who is Priya Saiprasad, co-founder and general partner at Turing Capital? Who is she?
Yeah, no, great question. So I was born in Chennai, and when I was very young, we ended up moving to Africa, to Nigeria. And so I lived in Nigeria for a large chunk of my childhood, and then we moved to 12 different countries before I turned 12 until we finally settled in the Bay Area. So the interesting thing is, you know, in some places we lived for 5 years, in some places we lived for 2 months, 3 months, and in some places we lived for 6 months to a year. So it sort of varied across the board.
So how did it shape your thinking? Because you're a person who's not afraid of taking risks. You know, you moved out of SoftBank at the peak of your career. You had made amazing investments in Microsoft, SoftBank and Mayfield. And what made you start Turing Capital? We're talking about a transition from institutional venture capital to private venture capital. So how was that transition? What was it like?
Yeah, it's a great question. And you know, it's sort of related to the childhood and upbringing. You know, every time you sort of move from one place to another, especially as a child, you sort of have to reinvent yourself. You have to learn a new language, you have to befriend new people and get accustomed to different cultures. And so it's kind of like taking a really big risk and a really big bet on yourself and innovating yourself, reinventing yourself consistently. And so that risk appetite that you're talking about, I think got embedded in me at a very young age, right? But having said that, you nailed it. How do you let go of stability and go after this entirely uncertain thing, right? And we also fundraised in not the easiest fundraising environment.
Yes.
It was 2023 when we did it, and the markets had fundamentally collapsed in 2022. Software valuations had declined by over 80%. So why would we go out there to fundraise during that time, right? So a couple of things. I would say, you know, through and through, most of my career at this point has been betting on entrepreneurs and entrepreneurs who are putting all their eggs in one basket and taking the biggest risk, right? And so, but I got to sit at these incredible platforms and had the opportunity to identify them, to fund them, but I was coming at it from a place of stability instead of actual relatability, right? And so now more than ever, I feel like my connection with founders is so much more deep and profound than it's ever been in the past, because I am a founder now, right? And we did let go of stability. We did decide to build this entirely new thing from scratch. We wanted to build a different type of VC firm. And so that part is truly exhilarating, scary, exciting, all of it.
Wonderful. So tell me about the time where you hired your first limited partner at Turing Capital. I want to give you credit. You raised $330 million on your first round. That was unheard of. It was like you came out of a fund when the storm was going to hit and you walked in the storm. How did you manage to raise that, and what was your first LP meeting like? How did you convince them?
Yeah, it's a great question. I mean, we set out to do the impossible in probably one of the worst environments to fundraise out there. But I will say, it really came down to probably three things. Our team. And so this team, so it's myself and two of my co-founders. The three of us co-founded it together. And the three of us have worked together actually across different funds for almost over a decade now.
Wonderful.
And so that sort of team camaraderie, we've had so many fights with one another, we've had so many agreements, we sort of push each other in different ways, and I think the three of us are very different, very complementary as well. And so that team dynamic, I think, really came across and comes across with founders when we try to win deals, it comes across with limited partners when we try to raise capital, etc. So I would say that's one thing that while we're a first-time fund, we're not a first-time team, right? The second thing I'd say is, the track record. I think this is an industry that goes after numbers. At the end of the day, we're stewards of capital, right? We have to raise capital from LPs and ideally give you significant return on that. And so the DPI, track record numbers, definitely was very helpful in helping us get the foot in the LP door. But the true convincing, I would say, came from team. Track record were sort of table stakes, but the AI strategy that I think we incepted and brainstormed and came together as a team.
Is it something meant for a private setup, or can you share a little bit about your
Absolutely,
strategy?
I will share all of it.
Okay.
So our strategy mainly came from, the three of us have been looking at AI for over 10 years now. In fact, actually before venture, when I was doing corporate development and strategy at
Tell
Square.
me, how was that phase in Microsoft where there was no ChatGPT moment? Satya was going to make the biggest bet of his career, I would say. What was it like pre-ChatGPT when you were at Microsoft at M12?
Yeah, it's a great question. When I had joined M12 and when we started M12, Satya himself was newer as the CEO, right? There was already a transitioning happening there. And I think that transition with Microsoft as a whole was phenomenal to get to be a part of and witness, because we went from a let's own the full stack type of a company to let's actually be an ecosystem partner and play well with the entire ecosystem. That was actually the genesis behind even starting M12, right? And that sort of an ecosystem mindset was critical, because we could see the writing on the wall that that's going to enable that massive aha consumerized moment where AI is finally going to be in the fingertips of everyone. While it took a little bit of creativity to see that at that point, because it was 8 years away, but we finally did hit that ChatGPT mainstream moment. And what that did was, I think the real reason why AI is here today and it's spoken in such a mainstream moment is because we had that consumerized adoption via ChatGPT, right? So all the innovation that was happening has been happening for 2 decades, right? Exactly.
So amazing. And how did that reflect on Turing's AI strategy, which helped you acquire your first LP?
Yeah. So our strategy was, we want to invest in early stage companies, but early stage companies that have product market fit, have revenue velocity, and that really go after building sort of a proprietary data moat, building the context layer on top of that data moat, and then eventually automating agentic outcomes, right? So that was sort of our thesis from day one. And what made
you saw the context and agentic.
We did
on?
actually. It was part of our initial pitch to our first LP.
Oh my gosh! So you're really what do you call a visionary fund, I would say.
Yeah.
So you're a Turing Vision fund.
I like that. It is actually because, back when I was at Square, so I did M&A, corporate development and strategy there. And I actually acquired a bunch of machine learning startups at the time to help amass. Square basically had a massive data set from their merchant base, right? So what do we do with this data set? What's the context layer that we can add upon that? And how do we actually underwrite upon that data and leverage it, right? So we did a bunch of machine learning acquisitions. Back then it was machine learning, then it evolved to sort of reinforcement learning, and then it became sort of LLMs and where the world is today. But we've been thinking about this for a really long time now. And so I think that when we came up with a thesis, it was actually pre-ChatGPT when we were ideating on this.
Wow.
And so the bet really that we made is something like a ChatGPT will come out shortly. It will be the next version of how you search, how you absorb information, and then more importantly, eventually, how you do work.
Yeah.
And so that level of disruption we fantasized about, but we had some tangible metrics to know that it would actually happen.
Yeah, amazing. So you're on the board of Pneuma, Dalupa, SafeBase, Pixis, Blink, Wingspan, OMG. So tell me, what do the founders do right to get you on the board, and what are the founders who are doing well for the board doing right? What are the kind of founders who nail it with the board in this day and age of AI and data moats?
It's a great question. I would say the founders that end up, being on a board is sort of interesting because you have board meetings. They typically take place once a quarter, right? However, if I, as a board member, interacted with my founder once a quarter, I'm massively failing in my job, right? Yeah. And so we ideate on things sometimes on a daily basis. We text each other all the time. We have multiple brainstorming calls.
I should give you credit for that. I think a lot of board members don't do that.
Okay. Yes, so. That's true. We really, I truly pride myself on wanting to be the first call for a founder, not when things go well, but when they're struggling with something, when there's something that goes wrong, or you might need to pivot, right? Yeah. Because we ultimately back teams. Markets, you can try to predict them as much as you can, but sometimes they're hit or misses, right? But if you bet on the right team, they can pivot, learn, adapt, have that resilience, and then we should be there for them during that highly adaptable change stage, right? So that I do with founders. But the biggest thing that I see between the founders who are super successful and the founders who aren't is the founder that comes in very humble from day one and has this sort of, I feel like growth mindset is almost an overused word at this point, but has that sort of intellectual curiosity where they know that they don't know everything. Yeah. So they want to surround themselves actively by experts, and they have this voracious appetite to learn, voracious appetite to adapt, mold themselves and change, right? So that I think is a trait that in my mind over time, my own pattern recognition, it differentiates some of the best founders from the founders who are good but just don't have such a type of outcome. Right.
So Priya, what are the top 3 things you look for when you work with a founder at Turing? As in, you have acquired the founder in your portfolio. What were those founders like, or what are those founders like?
Yeah, it's a great question. I would say this sort of intellectual curiosity.
And how do you know that?
It's such a great question because back when I was at Mayfield, actually, this is where I got inspired. So the Mayfield team is incredible in that they've been people first from day one, but Mayfield has actually a people x-ray that they've created over time.
That's interesting.
It's
Can we
hilarious.
talk about it?
Yeah, absolutely. So it's this people x-ray where when you meet a founder, you sort of dive into their psyche and how they think and what motivates them and who they are as a human behind the idea that they're fundraising for. for, right?
Yeah.
And that sort of was a different way of thinking. Prior to Mayfield, I hadn't seen that. I would focus on TAM, on market, on business model, technology, all those things, right? But really, 9 times out of 10, it comes to the people at the end of the day, regardless of stage, whether you're an early stage investor, growth stage, it's the same, right?
Yeah.
And so I'd say that people x-ray part of it is fascinating because you ask and learn. It's sort of similar to the questions you're asking about me, but how did they grow up? Has there been moments of adversity that they've had over time? What did they do in those moments of adversity? How did they adapt? Were they resilient? And what's the North Star that's actually driving them, right?
Yeah, I agree with you on that. I have interviewed a lot of visionaries, and the North Star description really gives it away. Some people are envisioning the Gartner quadrant, new quadrant, a new field when they are talking about the North Star. And they say, I'm such a small person, that's where I want to be. So then you know that this person has thought through things, right?
Exactly. Yeah. So there's a whole host of questions, but that's why building that relationship with the founder is so critical for us. And and it's a two-sided thing. They should ask me the exact same questions, right? Because that board member founder relationship apparently lasts more than the average marriage in the US. So you want to make sure that you're getting into a good, healthy, long-term partnership.
Yeah, wonderful. I'm very inspired by your people X-ray question. So I'm going to ask you back, what was the toughest moment of your career when you left corporate venture capital and the likes of Mayfield and SoftBank, and then you were on your own? What was the toughest moment for you?
I will say it is exactly the transition to start Touring Capital. So now looking back on it, it feels like it was so worth it. We're so excited I feel proud about what we've built so far, but I feel more fired up about the next 20, 30, 40, 50 years. Mayfield celebrated their 55-year anniversary. I want Touring to do that 55 years from now. Well, actually 53, because we've existed for 2 years now. And so that gets me really excited. But if I'm being candid, when the moment came for the markets had fundamentally collapsed, I had the opportunity of stability, right? To stay at a brand name venture capital firm that has scale and access and reach. And instead, I give it all up, go out on this fundraising journey, and we may or may not have raised now we've raised 330, we're super excited about it, but it was all sort of on a piece of paper that we had outlined. It was an idea in our heads. And so to leave that stability, still as an immigrant who moved to the US, I do come from Indian parents who did not appreciate it when I called them to say I'm starting something.
Gosh.
Right. So that sort of risk taking, I want to be that risk taker that I see in founders, but I also have that sort of anxiety that you feel with, what if this is a failure, right?
Yeah.
And so I've been fortunate to thankfully have some really good mentors over time. So I had a bunch of chats with mentors, and I'm actually starting the firm with 2 mentors. But having said that, during those chats, I think the question that I kept getting posed was, what's the worst that could happen? And my response was, I fail and we don't raise a firm, and I've wasted now 2 years of my life. And the question is, would it be a waste? What happens after that? Isn't that an incredible chapter of learnings that you could translate into what you want to do next? So I think it's a reframing of the fear of failure sometimes prevents us from doing greatness, right?
Yeah. That's incredible. So you're very good in scenario planning. Can I say that? I know it's a term people use, but do you consider?
I'm the ultimate planner.
Tell me, let's delve into your planning. Let's say you meet a founder, they're about to shut shop. How are you going to advise them to do scenario planning? After this, I do want to talk about your 12 investments. We'll get there, but just curious about that.
Yeah, no, it's a good point, because this is so important, because there's so many things that you as a founder cannot control, right? And sometimes founders get into this mindset where it's like, Of course, I see successful outcomes every day in the industry. Of course, this is going to be a success, and they end up being the eternal optimist, right? But that's not planning for market correction. It's not planning for buyers in an enterprise changing how they want to purchase this particular software. The business model of SaaS no longer exists. Seat-based pricing model is completely being shattered, right?
Yeah.
So all these changes are sort of out of one entrepreneur's control, right? So what do you do in those moments? That is where scenario planning, I think, comes into play, because you want to make sure that your unit economics, your cash runway, and the way you manage your business allows for these natural industry moments that could completely throw curveballs your way for your business.
Wonderful. So among the 12 investments you made in your first 2 years, what are some of the portfolio companies you've that defined Turing and their deepened their philosophy? Like, can you name a couple of companies and the kind of growth or the failures they saw and how you sailed through it?
Yeah, absolutely. You know, I always say this, where I've never in my career, and I would love to have someone else point out this, but I've never seen a company that has a trajectory that looks like this linear, straight line, right? Instead, it looks like, even if it's most successful, it looks kind of like a zigzag, right? And so it's what happens during the zigzags that matter the most, right? And so I'll give you an example. A company that I'm super proud of in the portfolio. I'm proud of all of our companies, by the way, but this one's a company called Pneuma.ai, and so they're essentially a AI infrastructure operating system for car dealerships. And so you can think about this vertical of car dealerships. Turns out most car dealerships in the US don't make their money by selling cars, but they make their money by servicing cars. Just a fun fact. Yet it's one of the lowest NPS industries out of any other industry. And so Pneuma actually started off by listening in on calls and working as a agent that could answer calls that come into dealerships and augment the customer support professionals in that dealership. And now they've actually leveraged so much data that they've built over time to launch multiple modules and multiple products, and now they're permeating as the infrastructure layer across car dealerships. And so that takes a lot of what we initially ideated on for our AI thesis, which is you start with proprietary data, then you build this context graph and layer on top of it. And then eventually you can be that agentic platform that just executes end to end.
That's amazing. So ground up, you're building like a really solid stack that can stand the test of time.
Exactly. And it's in an industry that is poised to purchase software in this manner, right? That's the other thing. Sometimes you can have the best technology stack across the board, but the industry isn't ready yet for a multitude of different reasons. So that's where a lot of our diligence comes into play as well.
Amazing. And let's talk about how you look at the industry going forward. What are some of the undervalued or underappreciated pockets where people are not looking at to invest or to build startups in, but you see that it's going to blow up? Yeah,
it's a great question, because ideally, we want to be able to identify opportunity that the entire market isn't seeing, right?
Yeah. You did that at M12. You did that probably at the other funds as well.
Right.
But what you did at Microsoft Ventures is amazing, like the kind of AI infra you guys built.
Definitely.
Yeah,
it's almost finding these non-consensus bets, right?
Exactly.
So I would say, when this ChatGPT had its moment, right after that there was a bunch of wrapper type companies that were funded, right? And then eventually within 6 months to 9 months, a lot of them got displaced by one feature that OpenAI or Anthropic would launch. So that was sort of the first wave of hype. Then there was a bunch of these coding assistants. That was the next sort of hype. And then it became obvious that, actually vertical AI is super exciting. Let's go after these verticals with deep data moats and deep domain knowledge, right? And so that we completely ascribe by. We just did that a couple years before the market. For instance, Pneuma, we bet on that 2 years ago at this point, right? But having said that, I think now more than ever, historically we've said, let's stay a little bit away from horizontal AI because it can be disrupted by some of the bigger folks like an OpenAI, Anthropic, etc. But now I actually think in the next 3 to 5 years, if you take a look at a P&L, like a profit and loss statement, and you find the unsexiest parts of that P&L, like billing, payments, accounting infrastructure, right? Those are moats that are built on exceptions, not the rules. And so you have this one obscure accounting policy here that changes the entire general ledger and how you calculate your data, right? That level of exception-based difficulty, we are finally going to be in a state where a AI native solution can actually go after, right, at scale. And I think that's going to actually be the future in 3 to 5 years, where when you're looking at the layer across the stack, you're going to find highly regulated industries that are really poised for that exception data versus the norm data, as I call it, and being able to fully end-to-end make that an agentic experience.
Yeah, give us a use case. I know you talk about accounting, but is there another field where, can we talk about that in healthcare? How do you envision that in healthcare?
Actually, this is a stealth company. They haven't come out yet, but we backed them. So I'm making their case for them. But actually, what is fascinating is healthcare is one of those highly regulated industries that has for the long time had the most broken value chain and value ecosystem in the US, and honestly in most economies. And so what if in this world of AI, consumers can actually have access to owning our data versus the call it Epics and Cerners, et cetera, of the world across these systems that don't talk to each other. You got your specialist doctors, general.
Messy.
It's so messy, right? But if we can actually have access to our own data, we can query the database of our own data plus coupled with public knowledge, and we can just have a conversation about our own healthcare by removing all the friction layers. I think there's been so many parts of the ecosystem that's been broken in the past, but now with AI, we actually have the opportunity to completely rethink the consumerized experience for healthcare, starting with enterprise healthcare sales. Right?
So this is amazing. I think you're talking about patient-centric and precision. There are a lot more verticals that will align here.
Absolutely.
So it becomes a very patient-centric model, basically, which
Completely.
is the future. Right now, it's a hospital-centric model.
Yes.
So things will come to the patient. There's a whole economy around that.
There absolutely is. And it's something that we've wanted for a while, but the technology hasn't been there to enable that, right? Yeah. And now it's finally there where, for instance, even today, if I have a healthcare issue, I just go on ChatGPT and ask it about it. But imagine if all of my healthcare records, all of my parents and genetic healthcare records were all the data set that feeds this, and I had access to that. How much richer would the outcomes that I receive be, right?
Yeah, amazing. I can also think about longevity, preventive medicine. There's a lot going on there.
Absolutely.
So wonderful. So Priya, there's this question as you were talking about the stack. If you look at foundation models, right? Companies who are building foundation models like OpenAI or Anthropic, so they spend a lot of money training. They're burning a lot of cash.
Yes.
So it's going to be a while before they see a real good margin. And if you look at the wrapper or the application layer companies, they are at the cost of being commoditized. They are innovating, and they are also a very low margin business. If they are high margin, they may be disrupted any time. So where is the money?
Where is the dollar?
Where is the dollar?
Yeah, no, it's a great question. I spent a lot of time thinking about that.
Take us to the stack. Priya stack. What does Priya stack look like?
Right. So I guess let's talk about your old school SaaS. And I call it old school SaaS, but it's 3-year-old SaaS plus, right? But your old school SaaS, the reason why it was so exciting is because it's 80% gross margins. It's high gross margin, it's high leverage, and you're able to scale the business really nicely. It's predictable annual recurring revenues, right? Because you have annual contracts that are per seat, per user, right? And that's a model that's worked really well. We all understand that. That model is being completely shattered by AI. And obviously the reason for it is because you're no longer looking at 80% gross margins, right? You have inference, compute, all kinds of stuff that goes into your cost of goods sold, that your margins, you're lucky if you're looking at 40, 50%, right? So that gross margin profile has fundamentally changed. But on the flip side, the exciting part is that with AI being implemented across your own tech stack, you don't need as many humans to build a company as you did before, right? We are seeing Series B and Series C companies that are the size of a seed and Series A company from back in the day.
Wow.
So the level of people that you need to scale the business is also dramatically changing. So what ends up happening is while your gross margin is significantly lower, let's say 40% gross margin, your operating margin, which is, by the way, a concept that SaaS companies didn't really even talk about before, because you would actually have negative EBITDA software companies being publicly listed all the time and have great public outcomes. But now we actually have a moment where we could have true operating leverage, because the human component and human capital component is becoming more scalable with AI than it's ever been, right? So what I think is happening is the entire cost structure of AI companies is looking vastly different from SaaS companies. Thus, the industry and multiples and how we want to value them, all of that has to change and adapt, right? Pricing model, we just talked about annual per seat pricing. That doesn't exist, because if your AI agent is doing a great job in delivering strong outcomes, you need less humans in that role, and so you have natural seat-based contraction. So seat-based pricing is becoming such a hindrance. That's actually why you're seeing massive dips in stock prices for your traditional software companies, right? So instead, today, there's alternate modes of pricing that's coming up. There's consumption-based, there's outcome-based, there's minimum commit requirements. The world is evolving. We're not saying one is better than the other, but I am saying that the model is fundamentally shifting.
So who's winning here? Is it the person who gets the business use case, or is it the person who understands how to execute, behind the scenes, or who is winning this game? For example, every big company is under threat right now. They're facing they feel that they can't lay off people, but they will have to at some point of the way agents are performing. So who is winning the bet?
It's a great question. I think the folks who will ultimately win are the folks who drive meaningful ROI outcomes, and then they're able to audit the entire trail. The model sort of retrains itself to make the outcomes significantly better. So what do I mean by driving end outcomes? Let's take this car dealership software company, for instance. Whatever industry you're going after, what is the end goal? Is it delivering a better NPS score? Is it generating significantly more revenue, decreasing costs at scale, etc., whatever it is? It's delivering the end output of that. So whoever is able to own that end-to-end output versus just being an insights delivery engine. So a lot of the foundation model companies are phenomenal, and obviously we can't do the work without the building blocks that they're doing. But having said that, it's not a full end-to-end loop. You ask, you learn, and then you do, right? But what if you ask, you learn, it has the context to continue learning from your asks of it, and then it does for you, right? And what if it executes contracts right away, where eventually you don't need to do that yourself? What if it executes billing, whatever it is?
You're talking about a decentralized ecosystem here.
Yes, absolutely.
Gosh, so the platform companies who are currently acquiring AI companies like crazy, what happens to them? Like, will they have a data moat, or what is it that they need to do to stay in the game?
It's a great question. I tend to think about the stack, and you asked me a little bit about the stack before. So historically, we had systems of record, right? That's like your Salesforces, et cetera, of the world.
It's so hot right now. The disruption of that, it's such a hot topic
Absolutely,
right now.
right?
Yeah.
So systems of record you had, then it became systems of engagement, which were the workflow software platforms that were built on top of the systems of record, right? And the workflow winners there in that era were, we understand what Priya as a business user really wants, what her workflow is like every day. We're replicating that in software, right? And so those were the workflow companies. So think of, in the same example as Salesforce, it would be like an Outreach, a Sales Loft, et cetera. It was the next iteration. And then the thought process was the third layer will be the systems of intelligence. What ended up happening, however, is the entire system of engagement category, I think, is in the biggest threat than it's ever been in the past, because they don't actually have access to that proprietary data themselves. They do the workflows on top, but our workflows as humans, with the explosion of ChatGPT and mainstream AI, has changed. I no longer have the same workflows I did 3 years ago, right? But these workflow companies were architected for a certain type of persona and the workflow they had. So instead, now you have a bunch of these agentic platforms that are starting, and they're allowing you to change your workflow, and they're customizing it completely. But they also don't have access. They need to work with the systems of record, right? Their data still resides in these systems of records, right? And so while we're seeing significant multiple compression in the public markets for these systems of records company, I don't think that's going to be as threatened as the systems of engagement companies, right?
So what about the people who do not buy the context graph argument? What is your answer to them?
My answer to them is there is no development that happens in AI where it's an autonomous engine that gets better over time without a context graph, right?
So you're a pro context person even before AI was a thing.
Absolutely. we talked about
it's built in your DNA.
Exactly. Because imagine, like, as humans, this is just abstracting the technology out of it, right? As humans, we make a bunch of decisions, and over time, ideally over a 10-year horizon, you have made some bad decisions that you've learned from, that you ideally won't do those bad decisions again. You'll make new bad decisions, not the same ones, right? That type of a learning process is what the AI needs in order for it to get better over time, right? So now we have world models, we have reinforcement learning environments, all of these different adoptions or these different developments that's going to actually enable that adoption at scale.
Wonderful. Right. So no, I want to talk to you about this all day, but I know that your time is precious, so I'll get down to the important questions of, first thing is, if there's a founder watching you who's building an AI startup, what are your guidelines to them, like top 3 guidelines to get your attention? How do they get your attention?
Yes. I love when founders are able to describe what they're building crisply and succinctly within a, call it like almost 2 or 3 sentences, a very crisp description of what you're building. And the pain point and problem that you're ultimately solving. Sometimes I found that a lot of founders will pitch us with, our technology is so unique and our technology is so amazing and it's so focused on the tech. The reality is we care about the tech, it's super important, but what is the market? What is the pain point that you're solving? Is someone going to buy this? Or how does this scale over time? But being able to succinctly describe from a customer's perspective from day one, I think is first and foremost. The second thing is almost like, what is your company building principles and framework in today's environment? That has to look fundamentally different than what it looked like 3 to 5 years ago. As I was saying, we love capital efficient founders because you can do more with less now because you have AI across your own stack, right? So how are you trying to build a company thoughtfully? In fact, in this day and age, I know it's still very common for companies to raise $100 million seed rounds, right? But why? Right? Why do you need that when you can do a lot more with less? So articulating that as well.
So Priya, there's something interesting observed in your profile. You have a very proprietary network. A lot of the founders you have backed have been founders you've backed in the past or founders you worked with before. So is that like important that the founders break ice with you, or they approach you to somebody who has worked with them and they know you?
Yeah, it's such a good question. Actually, this goes back to even the fundraising question that you asked. This is our secret sauce, which 30 of our former founders who we've backed in the past are now LPs in us, right?
Oh wow.
Yeah, so it's pretty incredible. And they were actually the first set of LPs in us.
Because they loved working with you, they believed in your vision.
Right. And it's ironic, we backed them before and now they're backing us, but that means more to us than anything else,
absolutely.
Right? And the reality isn't because, the reality of why they're backing us now is when we interviewed them and when we asked them, it's because we were there when things didn't go well. More than we were there when things went well. And then most of these companies had incredible outcomes as well, which is a wonderful end product, but we were there through all the zigzags, right? And so that relationship and that network of founders have helped us tremendously to win new deals, because anytime we have a new founder who we're trying to court and ideally win a competitive process, we introduce them to that existing founder LP base. And now more than ever, it's the individual who you get on your board matters so much, just as much as the firm that you get on the board, right? And so that shift is actually happening among founder mindset as well. And so that's been our secret sauce. It's our secret sauce with LPs as well. And then post investment, while I love my founders and they love chatting with me, it is even more helpful, I think, if I introduce them to another founder who's been there, done that in that moment when they're going through something.
Absolutely.
Right? And so we leverage our network for that too.
Oh, that's such a clever idea to have a past founder who has worked with you to be an LP, and then you have an amazing conversation with a lot of context with the incoming founder. So tell me, if Priya were to be a founder today, what are the areas she would be building? I kind of got a hint of it. You're talking about vertical AI, owning the stack kind of thing. But where do you see founders should be targeting? There are not enough solutions. You feel like, oh my God, why are they missing this?
Yeah. It's a great question. I feel like a lot of the times the really hard industries, the regulated industries, the regulated vertical, it's really hard because it's long sales cycles. The way people purchase software in those industries tends to be quite outdated, to be honest. A lot of them didn't even do the full wave of digital transformation, and now they're caught on their back foot in this AI wave, right? And so, but that's where real moats can be built, right? Because in today's world, the concept of a moat is dramatically changing because technology as itself is no longer the sole moat.
Okay, so I'll stop you there. What is a moat according to you? I've had back and forth discussion with many people what a moat is. What is moat according to Priya?
So a moat is something that you defensively build over time as a start. Over time. It doesn't happen on day one. You never build a moat on day one. You build, that's why it's building a moat. So you build a defensible sort of barrier that protects what you're building from competitors or upstarts to come into the category and just build what you've done over a day. Right? And so the moat grows with time, with context, with additional data, with network effects, with go-to-market creativity, with product virality. There's so many different levers for moat. Historically, the moat has, when I say historically, 10, 20 years ago, it used to be our technology is the best of class. It's so hard to build. It took us years to build this, and it's going to take you 10 years to catch up to us. Well, now the way people are building companies, I think the whole concept of technology moats are diminishing so quickly because your tech moat can be outdated in 6 months by one of the big players launching something, right? So the pace of innovation has changed so much than it used to be that what would have been a moat in the past is no longer a moat. So you need additional avenues of moat outside of just the fundamental tech itself, right? The tech itself can be, for certain, a moat, but you need additional moats to build that sort of, you can think of it as a fence that you build around your company that protects it.
Yeah, so I think the bigger players are getting stronger. Am I right?
They're getting so much stronger because the bigger players have the biggest moat of all, which is distribution. Right? They are able to reach the masses so much faster. So how do you actually compete with distribution at scale, right? And so you get creative with the product itself. You get creative by understanding the end user. You look for those pockets of creativity when carving out your own moat.
Wonderful. So on that note, Priya, are you up for a quick rapid fire?
I love a good rapid fire.
Okay, wonderful. What's the best career decision you made that everyone told you was wrong?
So I started off my career in investment banking, and then while all my peers were going to work at private equity firms and distressed debt hedge funds was also a really big thing then, I ended up going to Square. And so that Square decision at the time when I joined Square, they had not IPO'd yet. They were still a really small team. And so it was, you're joining a payments company. What are you going to do over there? I think that was actually the best decision of my career at this point because I was able to get to see company building from the ground up at scale, and I was able to also be at a place where, to be candid, the executive team looked like an executive team that I want to see across companies. 50% women in the executive team, and more the CFO, the CTO were both women. It was pretty incredible, actually. And so so I got to, at least from my formative years, I got to evolve as a leader. I gained a lot of leadership skills from that opportunity, and also from my network. It's differentiated, right? It's not your standard path.
Yeah, and I think it's made you the VC you are.
It really has. It absolutely has. And those machine learning acquisitions that I did do back in the day actually helped give me a glimpse into what I thought touring could be even back then, and ideating on that, right?
Yeah.
So, and it was just a very different perspective of being there and building with the product units.
Yeah. Another fun question. What's the worst thing you've seen a VC do? Either in a board meeting or outside, like it completely turned off the founder, and they do it repeatedly, and you're like, why can't I correct them? And
gosh, this is a strong pet peeve of mine. As a VC, it is important for us to understand that this is not our company. We are investing in someone else's company. We are, of course, giving capital and we expect things in return, but this is not our company to sit there and run. So a lot of times it's my pet peeve when you see a board member, you see that one person who thinks it's their company, and they're berating the founder, trying to run the company as if it's their own company, and trying to determine strategy and everything themselves, versus, our job is to influence. Our job isn't to run the company.
Yeah, that's a fine line to walk. I guess it comes with experience. Looks like you've had a lot of experience. Where's what's the one thing someone wants to break into a VC world? They're not a VC.
Yes.
What is this one smart move they can do? I know that you need to have domain expertise, you need to have exposure to M&A, all of that, but really someone with a significant industry experience, or even an outsider, what is the one smart thing they can do?
I think if you have access to a small pool of capital, it's not about the quantity of the pool of capital, but if you have access to a small pool of capital, doing the job before you get it is actually quite fascinating, because you can be an advisor for multiple companies. You can invest in the companies as an advisor as well with a smaller check. And so if you build a track record, you actually don't need a firm to do that anymore in today's day and age, right? So I have a lot of folks I know who just start investing themselves once they have a portfolio of, call it 5 companies, and they're seeing that the companies actually have markups and they're doing well, and it's leveraging their domain expertise from whatever domain or sector they have that in. That is a bigger proof point than any resume or any, I did XYZ and now I'm the best quality and fit for this. Because venture, actually, unlike any other industry, has no particular predefined archetype on what makes you good or not.
Look at Paul Graham. What was he before?
Exactly, right? Actually, there was an analysis done. If you pull up the Midas list, all the folks who are on the Midas list, and you look at their backgrounds, they're from vastly different places. There's no
so
common.
Many outliers.
Exactly, so many outliers. It's literally a list filled with outliers. So it's the outliers that make these investors so special. So I almost feel like having the right moat and doing all the quote unquote right things to get your VC job, that's being disrupted.
Yeah, that's incredible. I think, I could be wrong. The people with the capital are running the world. It's not governments anymore. These are very powerful people who capable of building the Microsofts or the Metas,
right?
And they are calling the shots on the AI governance, or they're impacting the AI laws and the distribution. So we are talking to the real change makers here, and you're one of them. So it's been a fascinating conversation. Is there something you would like to talk about to the audience about networking with you, or advice you'd like to share with them? Here you're sitting there, woman in STEM, and you've done these incredible things. You've got your seat at the table. I'm just truly inspired. I don't want to ask you anything. I'm just absorbing, but what is it that you'd like to talk about?
I love it when folks end up reaching out in the ideation phases of their company. Of course, as a founder, you want to talk to VCs only when you're raising capital, because you view raising capital as, a check the box, a means to an end to run your company. I love it when founders reach out before they need capital, to brainstorm, to ideate, especially we are so excited about wanting to learn, wanting to continue to build the ecosystem together, whether we invest or not. And so that is super exciting to me. And so that ideation phase with founders. So we typically look for some form of traction and product market fit when we invest, but I talk to founders at the inception and ideation phase all the time. And that excites me. It also gives me so much intel on where the future is headed.
Yeah.
Right?
Yeah, amazing. On that note, thank you, Priya, for the valuable hour you spent with us. I know you have a call right after this podcast, but thank you for making it to the studio and making this happen. We'd love to have you back once again.
Awesome. Thank you so much for having me. This was such a pleasure.
Wonderful.